would bring us back to early March when the price was on its decline in beginning of 2012. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on what is becoming quickly a very exciting time in the silver market. We'll talk a little bit of gold too, although fortunately to dig through the latest rally, and we'll mention, I know this is airing on Wednesday, although we're recording Tuesday afternoon, and we currently have a 34.92 silver price. So I'm joined by my dear friend Steve Cope of Silver Viper Minerals, who is going to share his thoughts on a lot of the things going on. And Steve, we'll see if while we're recording here, right around noon Eastern on Tuesday, we actually crack $35. Man, I remember it was just last week, people were saying we might get the long-awaited breakout of 32.50, and as you can see here in the chart, certainly went past that quickly. Obviously, a big rally towards the end of last week. So lots to talk about. Steve, welcome on in. How are you?
I'm doing well. I said, don't get away from that screen. I was watching it go up even as you were talking. They were inching closer. So it's long overdue, and it definitely feels better to see some.
We've rallied. We're up to
Hey, look at
94
it. Even we're
cents.
going,
There
look
you
at
go.
it moving up. It's nice to see traction in our sector, and not just on the metals price. Like the metals price is great, and obviously we know that drives everything. But we're seeing traction starting to build here this last week in the equities on the junior side and the producers, and one of the things we've been looking for is seeing everyone kind of rise and move up together, and that seems to be just starting. And for everyone who's been patient over the last however many years you've been involved in the sector, it's exciting. It's the start of something, and hopefully we break out to much larger numbers here in the short term.
Yeah, I know what you mean, and certainly we have finally seen some of that movement in the mining stocks the last couple of days, which I know for a lot of people watching certainly comes as good news. And Steve, to begin, I'll pull the silver chart back up again. Since today is our recording day is Tuesday, it is the start of the BRICS summit. We've seen a big move in gold and silver ahead of that. I'll go back to the 1 year chart. We've seen that all year in silver, a little bit choppier in silver than gold, but anything that's come to mind that you've come across or thoughts you've had in terms of why now in the past week? I think it's getting harder to say the influence of the meeting is completely uninvolved, but I'd love to hear any thoughts you've had as you've been watching this here.
Yeah, I mean, I think the BRICS is one part of it, and to me it's the overall general idea of de-dollarization, and that's why you're seeing, in spite of Treasury, moving up, what it, the returns are on that. You're seeing gold move up, because it's, a potential alternative to the US dollar. You're seeing cryptos move up as an alternative to the US dollar. You've got the idea of the BRICS nations coming in and presenting their option, which again is, an alternative to the US dollar. And so in spite of, the US dollar actually looking strong, all these other things are moving up because on the grand scheme of the world, there's more and more people that are, flagging in interested that they need to have another alternative than the US dollar to rely on for trade, to rely on as, or to hedge just against whatever they've got exposure to the US. So I mean, that I think is the overall driver. We've talked about on the physical side how a lot of those metals are going east. They're going in mass over to Asia and to Europe and to, I mean, not even as much Europe, but to parts of like, when we're talking about Russia or some of the other countries there that aren't, your core Western European countries. And people are piling on silver or piling on gold and adding silver now. And I mean, we've always talked about that side of silver being poor man's gold. And as gold gets more expensive, people are going to start to build, and start buying more and more physical silver.
Yes, and so far though, and I know this last chunk of this has happened quickly, Steve. Good news, we're rallying again up to 34.95. So
Oh, get there.
and 3/10. There you go. I mean, and if anyone wonders why we're having so much fun with this, just look at the chart of the last 5 years. So certainly nice to celebrate some of the things that are happening. And Steve, it's interesting because here you see this is the SIL Silver Miners Index, and as you mentioned, there's in the last couple of days really a significant move, similar with the Junior Silver Miners Index, and if we take a look back here, we can see we're touching just about that same level it reached in April of 2022. So for the technical traders out there, if that's a resistance level, at least, who knows, maybe bring some more money back in the market. But your reaction on the movement we've seen in the equities so far?
Well, it's been long overdue. I mean, it's just been this. Obviously, we've been in this long, frustrating market, but to see gold and silver moving up the way they have, and there to be very, very little interest on the equity side and money coming back in our space. We've had the odd window here or there over the last couple of years where you get, a month maybe to do a small financing or get something done, but I remember the last financing window and it was like, oh my gosh, this is the first time in years the precious metals fund in our space have had any inflows. And then, they have hundreds of companies go to market looking for money because as soon as you see one or two getting done, everyone wants to get it done because everyone's been in survival mode. So if we can get some real money back into the space, which hopefully this is the start of that, then you're going to see, the companies that have survived this tough period of time are going to thrive and they're going to do well. And you should see a lot more M&A. You'll see a lot of mergers, consolidating, bringing the better assets together. And then the market will be a lot healthier and you'll see stocks start to rebound and the rebounds and where the valuations of these projects should be with where metals price is at, you're set yourself up for some massive gains in our space.
Yeah, and Steve, I know obviously you've been in the process of trying to get a financing together, which has been tricky this year with a lower price. And we were talking before we started recording that you've heard, especially in the past couple of days, from more investors as your price has gone up. And sounds like that would be a fair extrapolation of probably what is happening at a lot of the other mining companies and explorers at this point, based on what you've seen and people you've talked to.
Yeah, I mean, there's definitely people that have been supportive, but you don't hear from them a lot, right? Like they're there, they follow, they've silently following you, but they've, especially the guys that really understand the market. And then yeah, as soon as you see some movement, all of a sudden, yeah, the phone starts ringing off the hook. What's going on? What's happening here? This looks better. This is great. What's going on? And it's been, we've been obviously working and hearing from a lot of different people, and we've different ideas, and at least with our company, of ways that we can go that we could add value even before the share price increases than that. And so we've been working on a lot of different things on a lot of different fronts. But I think that's all of those are signs of people understanding where the space is at and what's coming with the space, and that there is a lot of value to be gained here. So if you can position yourself early or get involved, with these things before the market really takes off, everyone's going to do quite well.
Yes, and in terms of what the market is doing, to put some of this into context, I see a high so far today, 34.96, declined 4 cents from the high. Although in the last day or two, I've been curious when exactly we reached these levels. And as of yesterday, we had touched what was the highest level since November of 2012, and when we crossed 34.28. And if you go back a little farther, you can see earlier in October, we did get up to 34.96, which my chart has us matching today. Aside from that, so that's October 4th, 2012. And to give you an idea of what the chart looked like, so that's basically around here. And if we do get to 97 today, or a couple cents higher, then that would bring us back to early March, when the price was on its decline in beginning of 2012. So there you can see that a little bit better on the chart. Yesterday it was here, there it's crossed there. And again, I'm going to be careful how I phrase this. No, I cannot promise that we're off to the race to $50 silver. Although what I just find interesting to have in the back of my mind is that we're at a level where the only two other times in history that this happened, we did go up to that $49, $50 range. So again, to be clear, it's not a guarantee of what's happening this time, although is it possible? I mean, especially when you think about the things that are going on, we have the deficit that's continuing on in the background, more banks talking about how timing of when that reaches a break point, and that's actually something I've been starting to research a little further into. But then you do have the BRICS meetings. We aired a video on Tuesday about the actions the states are taking as they turn back towards gold and silver and passing favorable legislation. So, any thoughts on that, Steve, and how we are looking historically here at the current level we're at?
Yeah, I mean, what I would say, I mean, maybe I'm naive, but I think where we're at now feels more like the beginning of a move up than, with those when you were getting towards the end of a big cycle. And one of the big things people have to remember, like the first one, obviously, Hunt, but that was a cornering on the silver market. It didn't necessarily reflect on costs and everything else that existed in the market. The last push up, 50 was great. 50 was a big profitable number for the silver producers. But let's look at 2012 to now at what inflation has done. I mean, I think one of the big things we'll have to do versus that last cycle is adjust the numbers for inflation. And so when you're looking at the cycle this time around, if you just take inflation and what that's going to move for when we're hitting a high, it's a dramatically larger number than $50 silver. And again, like you said, there's no promises. There's no promises this is going to happen soon, but I think we're closer to the beginning of a cycle, and the cycles typically last for, at least for years, not months or days. So I'm excited to see where we're going. We're finally getting a little bit of traction in our space. And I think in the grand scheme of things, like we've talked about in the past, when you start looking at what the costs are to the producers and that the primary silver producers aren't making money and haven't made money, we need substantially larger prices to support them, to support exploration in our space, and to support the idea of bringing on the assets that aren't in production that have higher costs than, because of inflation, because of everything else, and justify opening new mines on those in this, era of where we're operating at a silver deficit and we're running out of silver. We need new mines to come online, but you can't just the mining companies aren't going to build them if they're going to lose money. So we need the substantially higher prices to over a long period of time to convince the mining companies that it's a good decision to open up higher cost mines. There are still some very attractive lower cost projects out there, but it doesn't even put a dent into the deficit of what's being produced versus consumed on silver in a year. So we need a lot. I mean a lot more projects to come online. And to do that, you need higher prices and sustained higher prices. So, I mean, again, I think this cycle is going to be a lot different, and we're going to see a higher peak. When we see that peak, I mean, I hope that peak is 5 years from now, and we're just steadily moving up to that peak all the way through over time, or longer. But it is definitely looking a lot healthier. We're starting to see prices trend the way that they need to trend to make our industry healthier.
Yes, and certainly on top of that, we do have the factor that there is that looming possibility of a short squeeze, by no means a guarantee, although I think there's a degree to which we saw a bit of that, especially on Friday. Steve, this is the swap dealer positions, and Steve and everyone watching at home, swap dealers, you can think of banks as that's broken out. And you see, this is on the gold side. We saw a reduction in the short position. Actually, let me pull this back up. On Friday, in gold, actually, there was an increase in the short position, which is getting us not at the all-time highs, which were set a couple weeks prior, but close to it. And same picture in silver here, which means that, especially on Friday, someone was losing a lot of money. We don't know exactly which bank, although we do have, if you go through the numbers, according to that report, four largest traders remain short over 278 million ounces of silver. So losing $278 million on each of those $2 that went up. And again, that's 270 million ounces that they're short in a market where the mine supply is going to come in at 820 million ounces. So someone's getting their clock cleaned as the price is going up there, and either
And in spite of that, it's continuing to move up, which means at what point, you're going to see bigger gains if those people get caught in those shorts and have to at some point admit defeat.
and even while it's grown in certain weeks over the past couple of months, there's been a couple of times where we've seen a reduction in that, which I wonder if that means that those who would be short perhaps don't feel that they're going to have a chance to cover at a lower level. Not been much of a reduction in that short position. So, as always, we'll keep an eye on it. But I guess the key takeaway from that, someone was getting hit on those. And Also, not helping that situation here, we see these are gold, and I'll show silver import numbers in a second, but here you see on the gold side, these darker maroon bars would be the 2024 figures. So we've seen an uptick in gold, especially after, as you and I talked about a little while ago, India reported those import taxes, and we have seen the tick up. Here is silver. I thought you might want to share your views on these because the darker blue bars are the 2024 figures. And we were on pace, actually, as of about a month ago, to match the record setting 2022 when 300 million ounces were imported. This probably puts us slightly ahead of that, but Steve, that is a fair chunk of silver, especially compared to last year, that we've seen coming into India so
Well,
far.
I remember when this started too, the Silver Institute numbers didn't factor it in, and when we were looking at what the Silver Institute was reporting for deficits and everything else, and then there was the report that week of, oh, look at India now and what they're doing, and that's not factored into that at all. So again, it's just further. I mean, again, this is what we talk about. This is what we talk about metals moving east. You know, whether it's silver, whether it's gold to India, to China, to Russia, to other BRICS nation countries that are stacking. Like, I mean, this is what we're talking about. This is showing, you know, where the US, Canada, you know, Western Europe are missing out and not understanding what's going on a global level right now, and why, in spite of, like I said earlier, Treasury, you know, the returns on those increasing to where normally gold and that would take a hit, we're continuing to move up and hit new highs while that's happening. So this is why it's exciting, and this is a broad idea that as we get into a de-dollarization, and these are the countries, India being in a, you know, that are going to be part of the BRICS and looking at doing something different, that the US and investors over here have to wake up and see what's happening around the world, and that people don't want the US to be the center of everything anymore. And it sucks for me. I mean, I live in Canada. We're tied in. That's like, it's not a good thing. I say that, you know, and it's not great for our livelihoods and everything else, and you know, outside of what our investments are in this space, you know, but that's what's been going on. And you know, those of us in the industry and sector and people that are, you know, the gold and silver bugs, have been seeing this happen and then banging their heads on the wall because the media hasn't even wanted to talk about it for years. And now it's just finally starting, people are waking up and seeing what's happening as media is kind of being forced to cover it, and this is where we're at.
Hopefully, we'll be famous for our efforts one day, Steve. We
Yeah.
made it.
Well, I don't know if we'll be famous.
I think we survived the bear market. Still ticking. Every silver investor out there, give yourself a pat on the back today. Although, fortunately, we do have more, because here is from Bai Jiaojun. This was last week, but he mentions the Chinese customs has released the import and export data of silver in China from January to August, with an increase in imports and a decrease in exports, resulting in a silver deficit there. So, speaking to the Chinese silver demand, which you just referenced, and Steve, I know it's been a little quieter than normal in terms of Fed talk, but I know that you'd be upset if we went through one of these and didn't dig into that. So let's take a look at our probabilities, where current rate 475 to 500 basis points. So we see 10% chance of a pause at this meeting versus 90% chance of a quarter point cut. A couple weeks ago, we had markets looking to another 50 basis point cut. All in all, it certainly would be odd if the initial decision was between 25 and 50 after going 0 at the meeting before that. Then they go 50. Then to go 0 would certainly seem somewhat inconsistent. I'm guessing we'll get the quarter point cut. Although, Steve, I did have a question in here, believe it or not, because I'm going to play your hero here. This was an interesting comment. This is the very end of his press conference. And he kind of just puts his papers down and walks out. I was hoping for a peace out, America, and just, I'm done. Did not get that, but here's what we have.
I don't see anything in the economy right now that suggests that the likelihood of a downturn is elevated. Okay, I don't see that. You see growth at a solid rate. You see inflation coming down, and you see a labor market that's still at very solid levels. So I don't really see that, no.
Doesn't see it. We'll leave aside whether you see it or not, yet this has led to several financial commentators making a valid point of, if the economy is fine, was this done because of concern for the interest expense and the funding of the Treasury? Steve, as my one of my favorite Fed watchers, what are your thoughts on what's going on there?
Well, that's, I mean, the interest, they can't afford to pay off their interest. That's, I guess you can print and you can continue to do your downward spiral and expedite things, but that's always been one of the points. I mean, you had interest rates, you had banks failing, that they were having to bail out. The US can't afford to have interest rates high. And I mean, like you say, we'll ignore the fact of the recession talk and that everything is healthy and awesome in the US. But I mean, I'm looking at our banks here, and everyone in Canada is expecting a 50-point cut here, and we've been front running the U.S. on our cuts moving forward. So on Wednesday, or tomorrow, we're going to find out what happens in Canada on that front. I mean, Canada's always petrified of lowering too quickly and then losing, our value versus the US dollar. But if we drop a half point again, I would very much be surprised if the US didn't drop at least a half point on this next cut. And it's what's happening, right? It's what's needed to happen for people's livelihoods, for paying off the interest. Like, people are still hurting with interest rates high. And I mean, a high, there's the older generations that went through much higher interest rates, but it wasn't on the level of debt that we're dealing with here. We talked to guys here and they had 20% mortgages, interest rates on their mortgages, but their mortgage was under a year's worth of salary for the cost of their homes, where now people paying interest rates, like, it cripples you because you're paying such a large amount versus what you make in a year. And this is the new norm of 5%, 6% interest rates don't work on your mortgages. It kills people with how much housing costs now, at least certainly where I live, but kind of all over North America. It's housing prices are way higher than they've ever been historically, and the percentage of your income to what your mortgage is astronomically high, and never been higher in the history of the country, as far as I know, or the countries that I've been told from the history I've looked at. So interest rates can exist here, and if they do exist, people are being crippled, and people are going to lose their homes, or are losing their homes, or being forced to sell their homes and downsize to a supply chain of downsized housing that also doesn't exist in these areas, and continues to put pressure on the rental markets and other options that you have. My brother just rented out the top floor of his house, just the top floor of his house here, an hour outside of Vancouver, and he's renting it out for over $5,000 a month. Just the top floor, which has 2 bedrooms, and a garage down below. And then he's renting the bottom, rental unit for another $3,000 a month. Like, this is the rental market in Vancouver. And how do people, when people like hear that and they lose their minds, like, how is that possible? Why don't they just go get a mortgage? Well, it's because the cost of the house is so bloody high. They can't get a down payment together. They got to come up with 200, 300, 400 grand just to buy a townhome or a small older house. And with the costs and inflation and everything else that have been going on that we've seen over the last years, how do people save or get that kind of capital unless they can get it from their parents, but their parents are hurting even. So that's the state of the market. The say that everything is good and we're not in a recession, or not, a recession's not coming, is, you can't say that. We basically are in a recession, even with a healthy jobs market. You look at Canada. Canada's got good jobs numbers too, but it's, what are the jobs? What jobs are people working?
Did you guys get an 818,000 job revision in your numbers over the past year
we
too?
don't revise ours as aggressively as the U.S. But what happens here is the same thing. Like, and you see it there, like those great tech jobs and those big high paying jobs, people have to get 2, 3, 4 jobs, part-time jobs, and people are becoming Uber drivers or Uber Eats drivers or whatever else they can do to get these small jobs to get by. And you don't have the jobs that people need to get by. But it makes the jobs numbers look good. People are working, but how much are they making given the increased costs and what the cost of living is in all these areas? I mean, look at our birth rates now as a country. Like, our population is declining, but Canada's population is increasing because we're bringing in immigrants and people with money from other parts of the world to fill our population, because the people that live here can't afford to support the population. Way more and more people aren't having kids, right? And that's the hurt. It's because they say, I can't afford kids. It's not possible. Like, I can speak to it. Having two kids, it's very expensive. Like it's not cheap. And so anyone who steps up there and says the economy is in a good state or people like everything that's happening, you're not paying attention and you're naive. You're not looking around at how people are feeling, what their daily lives are, what they're going through. So hopefully we can move towards that or things change in this world and like you say, the gold and silver bugs are better positioned to handle that than the average American who hasn't had a clue what's going on, or average Canadian or European or anyone else in the West that doesn't know what's going on. But there are things changing in our favor, and I'm excited to see what happens over the next few years and few months.
Yeah, and that's exciting to hear. People are coming from all over the world to experience the Justin Trudeau regime, which
It's almost over. It's
sounds
almost
like
an election next year.
glad I can watch that one from afar, not leave thoughts about any particular U.S. presidential candidates aside for now, and get to something a little more. We're getting close to wrapping up, Steve, but there's quite a bit that's been happening. Here was a report from RBC Capital Markets. So they mentioned deficits should persist on growing solar demand. We don't need to dig into that again today, but just passing along another report that is going out to institutional clients who maybe they skipped it last week when it went out, but as silver. Oh, and where do you think our price is?
Oh, we haven't checked. Come on.
Oh,
It's so close.
wow,
Oh,
look at
I saw it. I saw 35.
yeah. So there you go. That brings us back to a new high since I'm going to take a screenshot of that one. $35 silver. Look at that. So that's the highest it's been since March of 2012 now. And how exciting to be here. Too bad we didn't do this one live. Maybe we'll do that next month, Steve, and
There we go. I
we can
mean,
break
every time we normally do it live,
36 or maybe we'll break 40 next month. We'll try our luck again.
there's a good
So
chance.
while this is hitting a trader investor's screen, maybe they would be revisiting. I say this just in the sense that 2 years ago, there was not banks focused on this as much. Bank of America has been talking about a lot of the things you and I have discussed. And anyway, here RBC mentioning it. Although what I really wanted to get to here, we talked a little bit about the stocks before, and we have had two deals recently on the silver side. First Majestic agreeing to a deal with Gatos and Core buying Silvercrest. Now, obviously, there's different segments of the equity side there, and we haven't really seen that filter down to the junior side by any means yet. Although, at least when you think of one of the steps that typically, if it's in place, might facilitate that further flow of money. Good news here. And if you had any thoughts on either of those deals or anything else deal wise that you're hearing or seeing in the silver space.
Yeah, I mean, I any M&A is healthy, and billion-dollar plus transactions are definitely healthy for our space. I mean, the Silvercrest one was interesting because I mean, that project from the beginning has been one of the highest grade silver deposits we've had in the world. And it had its issues after their economics and everything else. So when they started mining it, obviously that something happened, but it didn't match the feasibility. But it was still very high grade. And to see them, their valuations and their marketing and all the great work that Chris and Eric did, promoting that stock and getting it up, to see it, after they built it and proved up the concept and selling it, it wasn't a massive premium, but again, I mean, I think they ran the whole gauntlet. They discovered it, they built it, they grew it. I mean, they spun that out of from when they sold Santa Elena and Sonora, same state we're operating in, to First Majestic, and they spun out this and knew what they were onto, and then went all the way through and built it, and now sold it to Coeur. I mean, that's a big transaction for Coeur. That surprised me a little bit, but again, I mean, I know Mitch at Coeur, and I mean, it's always been an interesting company, and it's nice to see them kind of taking a bigger splash and growing their production profile as well. But I think it's also healthy that this is in Mexico, and this is happening and showing confidence by the producers in the existing mines in Mexico of the health of our sector and that jurisdiction. I mean, we've seen some very positive notes over the last month as AMLO's stepped out and Gloria's moving in, so it's nice to see momentum even within our jurisdiction in Mexico that we share. In that case, in the same state. So again, I think those are all positives for the industry. Anytime you have M&A, it frees up some liquidity for the existing precious metals fund. So again, as they get those shares or can sell their shares of the new one or have to consolidate because they owned, both sides of a transaction, it's just going to bode well, and you're going to see some more capital pouring back into the space. Besides, the new money that'll come in from the generalist funds and high net worths that are looking for, for inflows into the precious metals funds, because they don't necessarily know what precious metals companies to buy, and they rely on the funds that have more expertise in that area to do it. So we haven't seen a ton of generalist money inflows yet. I think we saw earlier, you saw that there was inflows into the ETFs and some of that stuff starting. So hopefully more and more of that generalist money comes pouring in. And if it does and continues to come in, you're going to see, weeks like we've already had where these stocks are going to go up 10, 15, 20% a day, just because there's not a lot of shares for sale. So as these companies start buying in the open market, you're going to see share prices across the board, move up and move up and move up as more money comes into the space.
Yeah, and Steve, you mentioned AMLO in there and Claudia Scheinbaum. Anything else you could touch on just to give people a clear picture? Obviously, Claudia has come in, I believe, as of October 1st. So anything that you've
Yeah.
learned, certainly something that's on people's minds.
Yeah, what was interesting, Claudia, I think I said Gloria before, I don't know why I said that, but Claudia, she came out with her 100-point plan, and it was interesting how it changed. I'm sure people have been following that, have been watching the companies, that have seen a lot of the companies put out different news releases or sharing, through their social media accounts, sharing different news articles on kind of this 100-point plan and how it changed kind of when she came in, and seeing the wording around the ban on open pit mining that AMLO had been a champion of, and had been, it's been sitting kind of in the lower courts, slowly getting worked on. But it was interesting right off the bat seeing her change to any company that has any existing concessions could potentially not be part of any open pit ban. The wording was taken out of her 100-point plan, saying that they would be pushing a full ban on open pit mining. And so it's just a start. I laughed because I right away I saw 3 or 4 companies say we fully expect to be permitted for an open pit, in 2025, which I thought was very quick and interesting that they were coming out and confident to put that out to their shareholders. But there is definitely a lot more talk around the fact that, she is going to be a lot more friendly for mining than what AMLO was, and that, for her rhetoric, even leading up to the election, that we always laughed at, because she had talked about any of the critical minerals, we need to get them into production, lithium, and then, people in the sector that understand mining knew every lithium asset that they have has to be an open pit. So there was always this contradiction between what she was saying and kind of what AMLO and the party had been doing. And then, if you start diving in, you see that a lot of her support comes from some of the northern states like Sonora, the number one open pit mining state in the country, but also Chihuahua, Zacatecas. Like, she has a lot of support up in those states, and you've had a governor from her own party fighting AMLO, saying like, you can't have an open pit ban. This isn't right. This is 20% of the GDP, and we're having no new mines go into production right now, and it's killing our state. So I think she has to be careful, and she's they've got the party line, but she's got her supporter bases and knows where they're at. And she definitely is taking a softer stance than AMLO, certainly. And so there is some, help here. And I think it's going to also help drive the value in all the Mexican exploration companies, because investors will get more confident and comfortable in what's going on in the country moving forward, that all of these great exploration assets, and let's not forget, this is the number one silver producing country in the world, and up there in gold as well. And so this is a country that we need to help fuel that deficit, because number 2 and 3 are even further left in Chile and Peru than what's been going on in Mexico. And so we need this silver, and we need this country that has a long history of producing the metal, and it's ingrained into their culture, and all the local communities in these areas want mines and want stuff to open. So I think it is very good for both, our sector, for all the Mexican companies, hopefully to help handle some of the world's, supply deficit of silver, that we can start looking again at getting, especially the open pit side, because we know silver in a lot of these is going to come as a byproduct. So the large gold copper porphyries in Mexico or in the the zinc mines, and that you get silver as a byproduct as well. Those going into production moving forward are certainly where you're going to get a lot of those silver ounces from as well as some of the smaller high grade, primary silver deposits or gold silver split deposits like ours that, the higher the silver price goes, it's great. Gold prices keep moving up, even better. And ours would be a combination of underground and open pit, but our original resource was certainly built around starting as an open pit heap leach operation before we move underground on the high grade vein. So while we weren't, for us as a company, we weren't stuck in that, okay, if there was an open pit ban, there's nothing we can do because we have, extremely high grades in our, our breccia structures that could be mined itself. It would be a lot less ounces, but we could have remodeled a resource to be, economic and around lots of underground mining. I think the best thing though is to start as an open pit and then move underground, and economics of that will be far better for everyone moving forward if we can continue to model it as an open pit and underground combination.
Well, certainly that's good. A lot of good news coming together at the same time, not to mention the comments of Joaquin Tapia, the director of international reserves at Banco de Mexico, who says, given the context we're facing right now, lower rates, political tension, US election, a lot of uncertainty, maybe the share of gold in our portfolios should be increasing as well. So some good things, good indications even coming out of Mexico. And Steve, perhaps the last thing to go over before we wrap up today. Obviously, I know the increase in the silver price. There we are at 35.02. I saw it hit 3 for a second. Obviously, has helped the environment, as we talked about, for some of the miners. You've seen an increase in your price. Obviously, the key thing you've been focused on getting the financing in place so that you can continue the drilling. I know there's a few things you've been working on behind the scenes, and anything that you can share to let people know where that all stands.
Yeah, I mean, I have to be careful what I say exactly, but even before share price increases, we've been, we were working on looking at the potential of doing a joint venture on the project, and we're certainly still interested in that approach. And we've had, different groups from around the world approach us on looking at that, and they've been diving into our database and looking at things. We've also been approached at now, even in the last couple of weeks, there's been some attractive offers on a different way of going about things with the possibility of mergers. And then obviously if the share price increases, another option for us to look at would be financing it ourselves and continuing to explore and do it. So it's nice to have the options. We'll see what makes the most sense for our shareholders moving forward. But the main thing is we don't want to continue to sit. We want to advance this asset, and this asset is at a point where we should be ramping up and have been adding drill rigs to the project and increasing the drill programs that we've done historically. But given the state of the market and the capital markets, we've had to take a step back. That's been very frustrating for us as a company and as a management team. So it's nice to see that things are changing. We've definitely got lots of interest in the project right now, and I'm excited for ultimately what ends up happening with our, for our shareholders and for us as a company. And we're aligned with our shareholders. So there's no one out there that wants more success on this project than I do in company, because obviously we've aligned ourselves with our shareholders to, as large shareholders ourselves. And so I'm excited. It's been a very difficult time frame the last few years, but there are a number of different things that we are working on. I'm excited to see, which one we believe ends up being the best for all of us as shareholders and as a company. But it's nice to have options and to, I've got our geologist working on even a larger drill program right now of what it would outline. Been having them outline a 20,000 meter program that we think would hit multiple targets and different things. And because I think it's important, one, for these other groups that are looking at us to see, from our perspective, where money should be spent. And I believe when we're done all of this, that's the type of program we're going to see run here on La Virginia, within the next 12 months, hopefully a lot sooner. And that will allow us to test, our main target, El Ruby, at depth, and grow the resource there, hopefully prove up our deeper target model that we have, that there's going to be very high grades down into deeper contact below El Ruby. But it'll also let us touch, 2 or 3 of our exploration targets. It's going to allow us to go back into the historic area where mine finders and Pan American were worked. and to start to bring in ounces that were isolated outside of our resource. That's going to allow us to update our maiden resource that we last came out with in 2021 and start to include, the 300 meters we've already expanded out Ruby along strike. It's going to allow us to use a higher gold and silver price, which may bring our grade down a little bit, but the ounces that you would add that now are going to be economic, from when we did our last resource using 14 or 1500 gold to now using, are we going to use 25, 2600 gold? I don't know. We'll see. But that's going to bring in a lot of isolated ounces, allow us to expand the pits that were put into the pit shells that were put in various parts of the project. You're going to see a much larger resource when we do that, and I would do it on the back end of that next drill program. So lots of exciting things to come. We'll need to be a little bit patient as we work through what the perfect way forward is for us as a company here in the short term, but I'm excited about what the next 12 months hold for the company and for our shareholders.
And Steve, I thought it was encouraging. You also mentioned before we hit the record button that even in the past couple of days, you've been hearing back from some of the investors that had been interested during the life placement a couple months ago. And with the increase in the price, you're hearing back from some of these people now who still have interest in what you're doing.
Yeah, people have definitely been following. Like, it's just one, people haven't had capital, and two, people definitely, I mean, and us included, we want to see work being done and the guarantee of that. And it's just been too much of having to, survive in this bad markets that people have been cautious with their capital. But this has always been a project that's been at the top of most people's lists of being one of the more exciting gold, or silver especially projects, with even having 40% exposure to silver on the project and then 60% gold. And there's, this is a project that, I mean, I've had major miners on the project and they love the project. They love where we're at. They'd like to see more ounces get added, but they see the potential for those ounces, and they certainly continue to meet with us and monitor what's, going on in the project. So it's on a lot of people's radar. It's just a question now of, as we get into a healthier market here and are able to finance exploration one way or another, depending which route we go, it's going to benefit shareholders. And that, I think, is the big key, is that people need to see that there is a work program coming here, and you're going to see that, very shortly with whichever avenue we decide to explore on moving forward with which partner or doing it ourselves.
Well, that really is great news to hear. I know you've been working hard at that for a while, and I won't speak for you on the timeline. I know there's some degree to which you can't comment, and certain things aren't set in stone yet, but I will mention, if people want to get in touch with you and get updates, whether today or at any point in the future, and get any questions answered, that they can go to silverviperminerals.com and hit the contact tab there. And Steve, in either case, it's great to see things coming forward. We'll do one last final check on the silver price. Oh, we're down back to end. Oh, and then we're back up. I saw 35.03 there.
There you go. Good day, Chris.
Hopefully by the time people are watching this, we're not back down at 34.50, but I would say if there's ever been a good reminder of taking a step back from the day-to-day, here we are. Beginning of the year, we were down at $22 somewhere around there in January. And here we are at 35. So quite a rally, regardless of what happens over the next day or week, but a lot of good things happening. And Steve, I appreciate you as always making some time to join us. A lot of good stuff you shared there today, especially about Mexico and stocks and everything else, and certainly the good news for Viper. And we will look forward to catching up with you again next month.
I appreciate it, Chris. It's always a pleasure.